Good morning, everyone. Nice to have you join me this morning. Let's get some things situated here, and then we'll get started. Okay, here we go. All right, we'll just wait for some folks to join in. Okay, I see a couple of you guys joining in now. Good morning. We obviously have just about 3.5 minutes or so to go before the market opens. As you can see, price is just absolutely ramping right now. So right here is where the release of the jobless claims came out. It spiked up into this newly formed supply. It pulled itself back, and then it went higher. And right now, continuing to go higher. So we'll see what happens once regular trading hours open. We'll see if that continues or if we get any kind of reversal at that point. So obviously makes no sense for the market to go up on that type of news, but we know that the market does not follow common practices, we'll say, right? All-time record jobless claims numbers comes out and the market ramps, right? Doesn't make logical sense, but it doesn't have to. The market can do anything it wants because the market is controlled by buyers and sellers. That's why we never get excited one way or the other. We know these kind of things can happen. We anticipate that they might happen. So obviously in the room we were talking about it a little bit this morning, and you guys know me well enough. I don't like to play news events like releases of numbers like jobless claims or potential rate cuts, things like that. I typically wait until the event has happened and then play the price action from there. So that's what we'll be doing this morning. Got about 1:40 to go before the market opens. Got my cup of Joe here this morning. Typically I have my cup of coffee very early, usually around 6:30 in the morning, but I was working on a couple of things this morning and didn't get to it. I usually only have 1 cup a day. I'm not a big coffee drinker like I was when I was actually younger. Like when I was in my early to mid 20s, I used to drink like 9-10 cups of coffee a day. Then I went through a period of years where I didn't drink any coffee at all. And now I just have usually 1 cup a day, and that's it. Okay, less than a minute to go before market open. See somebody else joined us there. Typically right around market open we get 5 or 6 folks. We got 3 right now. And I'm going to go ahead and take opening price level from the overnight session off. And we'll get ready to put on the new level. There's somebody else. Good morning. Todd Father says only 1 cup. Now, like I said, I'm 49, and back in my early to mid 20s, I drank about 9 to 10 cups a day back then. And I was actually addicted to caffeine at one time. I used to drink pop, cola, soda, whatever you want to call it, quite frequently back then as well. And my doctor at the time said, yeah, you need to get off of caffeine. So I didn't drink any caffeine for years and years and years, including coffee. And then when I finally did start drinking it again, it was just 1 cup a day. So that's how it's 1 cup a day. All right, so here's opening price level. Let's get started. Open $24.93. So let me draw this in. I guess I have to get the right tool. I'm almost always on the rectangle because I'm always drawing in support and resistance zones. So let's get opening price drawn in. And then we'll kind of watch the movement just for a minute or two. And I was up late last night doing some back testing on that RSI filter that my friend suggested. So I'll kind of go over that with you on today's session. Okay, so there's opening price level. Yep, I don't know how we got it off down there. As I say, it didn't look right. There we go. All right, so first move right out of the gate is up. And we know, normally, right, about 80, 85, 90% of the time, the first move is the opposite of what they eventually take it. Not always, but a high percentage of the time. So we'll see what happens here once we're in a minute or two. Good morning, Sonny. Nice to have you with us. I see we're up to our normal number. We're normally right around 5 or 6 people right at market open. So there's 6 of you joining this morning. So welcome to everyone. But yeah, during this session, I'll go over a few things on this RSI filter down here. I was going to go to bed early last night. Early for me. I was going to go to bed around 11 o'clock. And then I started fiddling around and back testing the RSI filter on some various things, and was actually getting kind of excited. I messaged Grayson, I don't know, might have been 12:30, 1 a.m. in the morning, something like that, and was telling him, how often it was playing out. I mean, not 100%, nothing's 100%, but just the small sample size that I've been back testing it seems to be highly probable in its outcomes, the way it works. Excuse me. Okay, so you see prices starting to pull back. Had our initial spike up, okay, right here, starting to pull back down towards opening price level. So would not be shocked to see it turn and go red, right? Because we know what happens a lot of the times. And now, of course, let's talk about psychology for a second. So coming into this morning, right? So here's what we did last night, right? That was the end of the day. Then we just kind of faded down right into demand, bounced, which is normal. Okay, but I'm going to show you, I can show you right now. Look, see right here, if we come down, we were under 40, which tells us we're not likely to get back up here or over this. Okay, that's what the filter's telling us, or that we could even get stopped out. All right, so we did get a decent bounce, but we definitely did not clear this. And then here was the move that I put in the room that I said would have been a really nice move. I wasn't, this was actually 6:30 in the morning. In the room, I think I said 5:30. This was 6:30 in the morning, but we had this nice shooting star. Then we had just sort of a resting candle. Once we took out the low of this shooting star, I think I had, it's in the room, I had one take profit target, I think somewhere right in here. Oh, I think it was right here at the end of this wick. And then the other one was this price level at 24.1175. And both of them would have been easily hit, as you can see. You guys know, you're starting to see this now. This just plays out over and over and over again. You just keep taking them. You keep piling up your wins. And then the news comes out, right, which in theory should send the market even lower, but instead the market ramps. So what would be the psychology coming into this morning? You know, retail traders are going to see this and they're going to say, oh yeah, you know, we should go up then, right? Here's all the momentum, because they always try to get in late. So we'll see now. We've only been open for about 5 minutes. We'll see, do they continue up and try to get up into this supply? Or do they kind of ramp it up and then pull it back and start fading down? Okay, that's what we'll be watching for this morning. But as you can see, again, right here, this did play out the way the filter is supposed to work. The filter is basically telling you that you're not going to make a big move out of here, okay? Or that you'll even pull all the way through and get stopped out. Now, we didn't pull all the way through and get stopped out there, but we would have came up here, and on this kind of a move, I think most of us, if we're being honest, if we were long here, we would have been getting out, right? Okay, so we would have been out, and then the market shoots up. Now, if the number would have been over 40, then that's telling you that you should see a bounce out of here that should get back up to here at least, if not higher. All right, so that's what it tells you. Okay, Todd Father, the one's at 1900. So let me go back. All right, right here's 1900. Is this the one you're referring to? I'll wait for you to comment. So this is 1900. 2 more to the right. Okay, 1, 2. All right, so would this be a supply zone? No, no. We really did not have any basing there whatsoever. Okay, it's just up and then straight back down. If we had any kind of basing, if we had maybe a tall wick here, so sometimes you'll see action like this, and one of these candles will have like a medium to taller wick, and then it immediately reverses and goes away. In that case, you'll have a zone where the wick is. I think I was covering that on one of the sessions before. It's one of the nuances, right? It's one of the few times where you don't have any basing whatsoever that you would draw it in. But this itself, there is no supply zone here. You know, and if you think about it, by the rules, right, the rules, this whole entire thing would be a zone, right? This whole green candle would be a zone, which typically you're not going to have zones that big. Occasionally you will, but no, that's why I didn't draw anything in. If, like, let's say this wick would have been about that long up to about here, then I would have drew it in right where the wick was, okay? But we didn't get that. Okay, so because the wick, in this case, if you had a wick that was up here, that would be your basing area, because that is what would show you where the sellers came in. This is just a sharp up and right back down, so that's technically not a supply zone. So hopefully that answers your question. You can see price didn't even hesitate, just went right through there, right? If it was a supply zone, you would have expected at least some sort of pullback, right? This morning, those of you who were up, this newly formed zone, if you remember right, this morning, it came up to about halfway in here, and then it pulled back down to about the top of this right here. Remember that this morning? Then it came back up, then it pulled back a little bit again, and then it finally went through. All right, so the zone was being respected. It's just that we had so much. Okay, so I wanted to show you something. Good, Todd Father. I'm glad that made sense. I want to show you guys something. Another way. I don't want to get too deep into this indicator down here. Obviously, I'm going to test it for weeks. It'll be down there for at least the next 2 or 3 weeks. It's very promising these first couple of days. But another way that my friend uses it is you can use the momentum down here. All right, you can use the momentum, and so you can get divergence. What we mean by divergence is here. You see how this? I'll draw this trend line in. This was moving to the downside, but where was the momentum? Down here. You guys see this? Okay, even though we were moving down. So if you come right over here, okay, and that was still a good scalp. But what we're looking for here is either is the move going to continue or is price likely to turn? So we did have a sort of a heads up that price was likely to turn because of this divergence. Even though this was heading down, the momentum was heading up. So sometimes that can give you a sort of a heads up that price is about to turn, which it did, right? So we knew even before the news. So when the news came out, basically it was just accelerating what was already happening. And then you get this big blast to the upside. Back in, when was the last recession was 2008 to 2011. So I think it was 2008 when price turned, if I remember right. In fact, let's just take a look at it. We don't have to talk about it. We can just take a look at it. We'll come back here to the market in a minute. Let me go to SPX. And let me see. I want to try to go back to 2000. I think it's 2008. Oh, I went too far already. That's crazy. My 85. All right, here we go. All right. Yep, right here. Okay, so you see this? This is 2008. Okay, I want you guys to watch this because this was something my friend pointed out. All right, we were going up, and okay, you see if you go straight up from where my cursor is right now, if you go straight up, we're still in the middle of this move up. All right, but what did this show? Okay, it was already trending down. I'm going to show you this. Even though price was trending up. Again, if you're at the peak here, you're still in that move. This was a precursor, and he called it. He was one of the few people that called this big move down, and one of the ways he called it was with this divergence right here. Price was still moving up, but down here, this RSI had already turned down. You see that? So you can also use this as again, just to kind of get a heads up when price might be ready to turn. right? Because you'll start to see divergence. If price is going up and the RSI is going up, that's showing strength that direction. That's also one of the reasons if we're coming up into a supply zone, if both of them are going to the upside and you're above 60, that's why it says not to take it, because it's likely that that momentum will carry you right on through, or you'll just get a small move and then up. But when you see this here and this here, that was a precursor. Again, it was about right here. If you look straight down, it was already going down, and that told you that price was likely to be changing, and did it ever change, right? So it headed all the way down, okay? Hopefully you guys see that, and that makes sense to you. All right, so we'll go back and look at the market, then we're going to start looking at some other names. See where we're at. We can set some alerts. Thinkorswim is, again, crawling this morning. So I apologize that the screen is so slow. It's Thinkorswim. It's not my computer or the internet. I'm actually plugged directly into the Ethernet, and I have 1 gig service, so it's not the speed of the internet. It's Thinkorswim. Okay, so here we are. We've got 15 minutes in. We haven't made it all the way up here yet. I have an alert set, so it would go off. And let me put an alert just below. That'll tell us if we start heading the other direction. And then we can start looking at some other names. There we go. All right, so now we have alerts. It's starting to come back down anyway. You see that starting to ease back down. Let's go to Roku. Let's start with Roku today. Here it is. Okay, so here's Roku. And Roku yesterday came up into supply. And if we go down, it was above 40, right? So that would have meant, hey, this is a good short. And as you can see, so far, right? So far, it has been moving down. So from here, high of 97.97, and it's been as low as 91.51, right? So that's already a $6 move to the downside right out of supply. So we came up, you know, fairly good move to the upside. Right here, we bounce, start heading lower. And we look down using that filter. The filter says it's okay to go short here because we're above 40. This line is 40, this line is 60. The way I have it set up, you'll notice it's always green when it's under and it's red when it's over. That just visuals for me. You know, obviously you could set it any way you want. All right, now, what do we see though? Okay, right now we see that we're starting to trend back up even though this is trending down, so that could tell us that a change in momentum is coming. So we'll keep an eye on that. But from right here, it was telling us this was a good short, and it's already moved down $6. All right, so I wanted to start off by looking at Roku this morning. All right, let's look at some Forex. We're just going to jump all around. And if somebody has something you want me to look at, you just let me know. But we're going to jump all around. Okay, so this is the Aussie CAD. And again, we came up, this was just a little bit ago, 9 a.m. We came up here and barely touched supply, and we sold away. However, okay, if I'm going by the filter was over 60, right? Right there, over 60. Okay, now it did bounce down. Let's see how many pips that was. That was a high of 8524 and a low of 8474. 4. So that is about 50 pips. So that's a pretty good bounce, though. That's a pretty good bounce. So that's a pretty good bounce there. And now it's moving back up, though. So now again, this is supposed to be also telling us not only whether it thinks it's a good trade to take, but it's also supposed to be telling us the likelihood that we'll get back down to the low or past the low of the origin of the move. So we may not get anywhere close to this, and in that case, it's correct. But right here, 50 pip move is a 50 pip move. I would take 50 pips any day of the week, right? But what it's telling us is that when you make this touch into supply, if this is in the 60s or over, which it was just barely, if you look over there, 60.0267, it's just saying that it's not likely to get down here to where the low of the origin of the move is or below. And it came down and it's working its way back up right now. So we're going to keep an eye on that. And then I think I had an alert go off on Aussie yen. So let's look at it. Remember, almost all the Aussie pairs move very similarly. All right, so here was our touch. It was also at 9 a.m. Okay, right there. We were definitely in the 60s. And it did the same thing, right? It came down. And now it's working its way back up. So let's see what kind of a move that was. 25.99. Okay, so that was about a 26 pip move from its high. Okay, not quite as big a move as we had on Aussie CAD. It was about a 26 pip move. But what this is telling us is where's the origin? So the origin would be right here of this move up into here. So it's just saying that it's not likely to get back down here or lower. And as of right now, we've bounced and we're coming back up to test it again. And I have this set right here to see if I'd get stopped out. Now, that would be right on the edge. On the other one, on Aussie CAD, I would take 50 pips all day long. I'd probably just be out. As soon as price started to reverse right there, I'd be out. Right, just take my pips. 25, 26, that's kind of right on the edge. I probably wouldn't have moved my stop yet, and my stop would be up here. But I didn't take the trade because this filter, I'm just trying to test it out, right? This filter says, you're not likely to make a big move. All right, so I'm just trying to test that. All right, let's go back and look at some equities. Let's see what BA is doing this morning. Okay, gapped up. See, we closed here, we gapped up, went up, come back down. Now you're going to notice as we go through, a lot of these names flushed at the end of the day yesterday. Why is that? Because the market flushed. So, 80% of the names in the market will be dragged down with the market, right? So you're going to see this a lot as we go through here. Okay, BABA. All right, I just had an alert go off, and we're going to go back to it in a second on Aussie yen. Okay, here's BABA. So BABA opened flat, went right up to resistance here at 193.54, and has pulled back. Actually, I take it back. It would have went down first, then it went up, then it pulled back. Okay, so it's up on the day for regular trading hours because it opened flat. We're right here, but we went right up to resistance and then it's pulled back. And let me look here. I wanted to look at something. Yeah, it's showing it up $2.73. Oh yeah, and yesterday, here you go, market close. See, it flushed just like the market did. All right, so we had an alert just go off on Aussie JPY. Let's see why. And there you go. We would have been stopped out, right? We were just here. So price was down here, and in just the minute or two we were gone, it spiked all the way up there. So the filter worked, right? It came up. When it pierced in, we were in the 60s or above, so that's telling us probably not the best trade to take. You're definitely not going to get a big move. It came down here. We already calculated that was about 26 pips, and it spiked up, and as you can see, my alert went off. I had my alert set just outside of here where my stop would have been. I would have got stopped out, right? So if I would have entered down here, 18, and then I would have had my stop just outside of this zone. So 18, I would have had my stop probably at about 30. So that would have cost me 12 pips, right? And it just depends on what you're playing. If you're playing a full lot, a standard lot, that'd be 120 bucks. If you're playing half a lot, that'd be 60 bucks that you wouldn't have to lose, right? So it worked. It worked right there. So as I'm testing it, that's what I'm doing. I'm marking where we touch, and then I'm marking where my stop would be placed, and then I'm judging by what the filter tells me, did it play out correctly? So I was telling Grayson last night when we were chatting late that I would say last night about 95% of the time it was working. I spent about 2 hours going through various names and going back in history and looking at different supply and demand zones and when they touched and where was price at the time. So yeah, so far it seems to be playing out a high percentage of the time. In fact, let me look over here. Okay, yeah, so we came down here. We were below 40, right? Here was our first touch into demand. Here's our first touch. So this is saying don't go long. Don't go long. That's what this is telling us. And look what happened. After our first touch, we based and then dropped right through the zone. So I would have got stopped out, right? So it would have saved me. That's what it's designed for. And let's see how many pips it would have saved. Okay, let's see. Would have saved 30 pips. So on a standard lot, that's 300 bucks. On half a lot, that's 150, right? That would have saved 150 right there. Or as much as 300 bucks. Just by listening to what the filter said, right? So when we touched right there, you go straight down. We were below 40, so it says don't take the trade, and look what it did. It based and dropped and went right through the zone. So then it came back up, right? It created supply right here. It came right back up, touched, it bounced down a little bit, but we come down. Okay, now what does it say here? Right? We're not above 60, so it's saying, yes, it's okay to take this trade. Right? But is this one where it didn't work out? Yes, it did not work out. Right? Because we weren't up here, so it's telling us it was okay. So this was one where it didn't work. Went up, stopped us out, came back, and then we got the move. So we did get the move, but we would have been stopped out. Right? Because we would have, excuse me, we were looking for it to bounce down and it never did. So here is one instance where it was incorrect. Incorrect, because it was telling us it was safe to take the move down and we never got it. All right? Okay, so let's go back. We had an alert go off on the market. And let's see where we're at. Okay, I think that alert was telling us we're up into supply. It is. Okay, so here we are, but we're above 60. We're above 60 down here, and we're trending up. Okay, so would I be excited to try to go short here? According to this, no. According to this, no. But this should be, I mean, it should be strong. I mean, this is like textbook right here. Strong rally, Nice base, 1, 2, 3, 4 candle base, which puts us right in that 2 to 6, which is ideal. 2 to 6 candles basing, and then sharp drop. Big rally, perfect base, sharp drop. This should be as strong a zone as you could possibly get, but we can see that right now momentum is against us. So it's saying, according to this, because right, we're way over, we're like up in the 80s, and we're trending up. It's saying that you shouldn't take this short. So we'll see. We're going to see how it plays out. Here's what I'm going to do. I'll put an alert here. If I can get it to come up. There we go. I'm going to put an alert here. And then I'll put one above the zone up here. And then we're gonna find out what happens. Now, all this being said, again, I want you guys to know, I'm not trading the indicator. It's just a filter. I'm still trading price action. So if for some reason, like we'd get a nice shooting star in here and then price takes out the shooting star, I'm interested in that all day long, right? Because our price targets aren't going to be way down here anyway. Our targets are going to be, you know, something that makes sense, that we know we can probably achieve and get out with a good profit. All right, so I want you guys to understand that. We don't trade the indicator. It's supposed to filter out potential bad trades and give us an indication of the strength of a potential move. All right, so there's where we're at with the market right now. Let's go back to looking at some names. Let's go look at Tesla. All right. See what we're doing this morning. Okay, we gapped up. So it sold down, okay, just like the market did yesterday. Kind of held the 200 though. You see some of these other names, the final candle of the day was a big wide-ranging red candle. Tesla, it sold down, but then it came back and held the 200. Gapped up, came down a little bit, went up, came back down, and right now it's pretty flat. Pretty flat as of right now. Since we're here, let's look at Twitter. Okay, here's Twitter. And we could have extended that across. Okay, we just had an alert go off on the market. We'll go back and look at it here in a second. If I extended this across, here's where it broke out and it's come back to retest. I'll just drag it across so you guys can see. This was that ranging action that was occurring. So let's just stop right there. Okay, this was that ranging action that was occurring. Here we finally broke out and we got all the way up here, and now it's coming back to retest this, and it looks like it's bouncing again. See? Came down, retest, bouncing again. So here, this is what you'd want to take out on Twitter to really try to see some upward movement, but what obstacle do we have right here? The 200. So we look, we've got this area, which has been respected. You see it? Okay, this resistance level at 26.76. Then we have this big wick, right? We have this big wick, and then we have the 200. So we have some obstacles above on Twitter. Sonny, are you asking about the market? Are we going up on the market? We just had an alert go off anyway, so let's go back. Wow. I'm just telling you guys, Thinkorswim is like molasses this morning. Okay, so the indicator says that we're not likely to get much of a move back down right now. Now that can change, and I'll talk about that here in a second. But what it's saying is at this current moment where we entered supply, You see we're trending up and we're well above 60. So it says anything above 60, you're not supposed to look to go short, because the theory is the momentum is so strong that it could carry you right through here, or if you get a bounce, it's going to be small and then it's going to can try to continue on up, right? So that's what it's saying. Now, what I'm telling you is that we still trade price action. We're not trading the indicator. So let's just give some scenarios here. Let's say this candle would end, and we got 26 minutes to go. If it ended right there as a spinning top, what do we know to be the highest probability? That would be what? A bearish signal. A bullish signal, because the move up, strong, and if you got a spinning top here, that would be a resting candle. So then if you went and you took out the top of that, you would be looking to continue on up, right? That's price action. We would be ignoring the indicator in that case, right? Again, I am not trading this. I'm just trying to see if it's accurate in filtering out bad trades primarily, all right? What if, I'm trying to give some other scenarios here. I mean, it could, if it broke all the way up through and hit this, that would mean we got stopped out, right? If we went short. But let's say that this goes up, comes back down, and it forms a nice shooting star. Again, I don't care what this says at that point. I would then be looking for a scalp below the lowest point, right? If this went up, came back down, formed a shooting star, and then we could take out the low, I would be looking for a scalp back down to opening price level. So just giving you some scenarios. We trade price action, right? Primarily. Number one, over all things else, we trade price action number one. Then we trade supply and demand, support and resistance, and we're just trying this out to try to see if it helps us weed out some of the bad trades, right? Some of the ones that we would have got stopped out on. And then we're also going to see over time, is it accurate when it says that it's okay to enter a trade? Are we getting those moves back to the origin like it's supposed to tell us? So if we're down in this zone here, when we hit supply, it's supposed to be telling us that there's a high probability that we'll at least get back down to the origin of the move into supply. So the way my friend trades it is he looks for like this, like a strong move where he knows. Now he mainly trade, now this is something he would trade, the market. He mainly trades Forex and futures. So he would look at this, and if the indicator was below 60 when he hit supply, he would be, in his mind, his target's going to be clear down here somewhere. Because he believes the indicator's telling him there's a high probability you're going to at least get back down here, if not lower. Right? So the reason I point that out, let's say that the origin of the move was right here. And then you came up and you got the high probability that you're going to come down there. Okay, that's still okay, but you just don't have much reward there, right? You wouldn't have much reward if like the origin of the move started here and you went up and it's saying you could go long, or go short. Excuse me. However, okay, it's also telling you that you're likely to take that out, so maybe you'll go way past that. But this is the kind of stuff he looks for. If he had this type of a move into supply and he's under 60, then those are the types of trades he's looking for. All right? Dojis, hammers. Yeah, you talking about up here? Now up here, I'd be careful about a doji, right? Because you have this strong move to the upside. If you got a doji right there or a spinning top, that's still a bullish signal because it would just be a resting candle of this, right? Because the overall trend at that point is up, and if you got a doji in the upper 25-30% of this or a spinning top, you would be looking really to go long at that point if it took out the top of that doji or spinning top. Now, if we end up forming a shooting star here, that's changing things, right? That's changing things. Let's say that the doji or spinning top was formed right at a resistance level. That could be the sign of a turning point, right? Now, I'll give you another scenario. Let's say a doji formed right here, and then price starts back down and takes out the bottom of it. You could look to go short there, absolutely. Okay, that's just trading price action. But what we know is the probability is if we're in a strong move and we get a doji or spinning top in the upper 25 or 30% of this candle, that's typically a bullish sign. And we would look for the top of that next candle to get taken out, right? All right, so far, we're not there yet. So far, this indicator has been correct, right? It told us not to go short here. And look, we're still going up. If we get up to this alert, that would mean, now I would never on ES have a stop that far away. Not on ES. On a Forex pair, yes. On an equity, maybe, right? But again, I'm just going through by the rules. So the rule would say, you place your stop just outside of the supply zone. But you can see we're still going up, and that's exactly what the indicator shows. The indicator said don't go short, and we're trending up, right? And so far it's been correct. If it takes this out, now I can guarantee you, if I was going short right there because I hit supply, I'd already be out. Because my stop would probably be right at the top of that wick, right there. I'd have a very tight stop. But we're just playing right now by the rules to see how often the indicator is correct. And right now, it's been a high percentage of the time. Okay, when do we ignore RSI above 60? Once pierced through supply demand and in basing candles. Okay, so are you saying that if we pierce through up here, do we then ignore that at that point? Is that what you're asking, Sonny? Because there is a little bit of basis for that. So he had showed that when you pierce through like a zone, if price starts to turn around somewhere, you can look and see, has the RSI indicator started sloping down, and is it back under 60? So just because it pierces through doesn't mean we ignore it, right? As long as it's up here and as long as it's trending up, you wouldn't want to, at that point, you wouldn't want to be going short unless some price action told us to go short. Does that make sense? So hopefully that's answering your question. You wouldn't ignore it, but if you got up through here and then you saw this start to roll over and then it got back down below here and we got some signal to go short, that would almost be confirming it, right? Because right now, price action is going up and so is the indicator. And that's why it was telling us not to go short here. Right? That's why it was telling us that. So I hope that answered your question there, Sonny. It's not like just because it pierces through here that this is no longer valid. As long as price is moving this direction and this is moving this direction, I've actually, when I was doing my back testing last night, I saw some times, and I tell you guys this over and over again, I saw times where this thing would be pegged clear up at 100 and pegged for a while, and then finally would start to drop back down. You can stay oversold way longer than you think you can, overbought or oversold. But if I could remember the name, I would show you. But there was one name that I was doing some back testing on last night. This number was all the way up at the top and just pegged for a while, and then finally started to fall back. And what was price doing that whole time? moving up. It just kept going up and it going right through supply zones on the way up because it had so much momentum. I see somebody else joined us. We got 7 now. I don't know who it was, but welcome. Welcome. All right, so let's go back and look at some other things. We've got our alert set here. I'm going to put this alert down here if we start to get back out of here. This will allow us to look at some other names. Okay, so now I have alerts set on each side of the zone. No. Okay, so I see your question. Sonny's asking, once the first candle pierced through the supply or demand zone, do we ignore from then on the second, the third candle? No. No. It's still in effect until there's a reason for it not to be. It's in effect until there's a reason for it not to be. So if this rolls over and gets back below 60, or like I said, if we get like a nice shooting star here or some sort of price action signal, then I would take the price action signal over the indicator in the short term, right? In the short term. But I think what you're asking is, this is the first candle that pierced in, then we get a second one, then we get a third one, then we get a fourth one. Do we start ignoring this? No. Nope. Don't ignore it until it gives you a reason to, right? Until it either rolls over and gets back below here. So that is an instance. So he had showed an example where price comes up in here and it stays here 3 or 4 or 5 candles. Then this rolls over and gets back below 60. That might be a time to then look to go short. You're probably not going to get all the way back down here because that was based on when you entered. But when it rolls over here and gets back below 60, and let's say you had 1, 2, 3, 4, maybe on the 5th candle, and it starts to move down out of here, then that might be okay to go short and have a target. All right? But see, this is one of the reasons I don't like indicators. You're asking like a bunch of questions. Well, what about this? And what if this happens? And what if this happens? And what if that? That's the problem with indicators. They start becoming complicated, right? That's why I don't like to use them. That's why I don't like to use them. Price action is straightforward, right? It's straightforward. So we don't want to if we start thinking too much, then it gets us paralyzed on taking the right kinds of trades. So just remember that. Yeah, I see what you're saying there, Al. He says using the RSI, if it works off of the overbought condition and falls below 60, it could then be a valid short. And that's exactly what my friend was saying too. So if you're up in here and you're in over 60, all right, and you kind of maybe base here and then start to drop and this drops below 60, then that would be a valid short. It doesn't mean you're going to get all the way back down here. It's just meaning at that point you're likely to start falling. And again, we know based on price action, we would have targets to shoot for. All right, but again, so far, this is playing out exactly like the filter says. The filter said, don't go short here. Nice, Al. Nice. So Al's kind of been using these rules or does use these rules, so that's awesome. Okay, and I think you were saying on yesterday's live stream, they do tend to play out a high percentage of the time. Not always. We just saw one earlier that didn't play out. But hey, if it plays out 85, 90% of the time, that's really good, right? All right, so let's look at some other names here. Here's Amazon. Okay, so Amazon formed supply, fell away. We've come back up. We've touched it. Now, if we come down here, just based on the filter, this is saying it's okay to go short and that we're highly likely to get back down to this level here or lower. So I'm going to set an alert. We're going to see. if this ends up playing out. All right, so let me set this. Okay, so based on the rules, all right, we just formed supply, we dropped, we came back up. This one didn't touch it, this one did. We come straight down, we're below 60, right? We're below 60. So this is saying that we're highly likely to get down to at least the origin of the move back up. So we're going to see how that plays out. All right, alert just went off on the market. I think we would have just got stopped out by the rules. Again, we wouldn't, yep, there we go, see? You guys see that? So it was correct. It was correct. It told us not to go short here. And you guys who, I don't know if you're all new to supply and demand or if some of you know something about supply and demand, but this couldn't be any more perfect. This is like the strongest type of zone that you're ever going to get, right? Based on the action. That's this. And look, the momentum was just so strong. And see, it's still going up. The RSI is still going up. And we're just climbing. And that's why it told us don't go short there. Okay, so it was correct again. All right, let's look above. There we go. So the next level is going to be clear up here. We probably have obstacles in between there. I need to change that to 75. I don't know why it says 77. There we go. Okay, now that seems like a big area, but if we go to a higher time frame, let's just go to 1 hour first. See if that gets us where we need to be. Yeah, here we go. All right, so if we come back over here, you see why it's such a wide range? Right? You see that? There's nothing really in there until you get up here that could potentially stop you. All right, so here, what happened here? Do you guys remember? We limited down. That's why you see all those little dots there. Okay, we had this big drop. We hit limit down. All right, then we dropped again. And then even though this is a wide range, look, kind of range in here. Then we drop down some more. Okay, but this is why these two levels are so far apart. There's nothing in there. So if we break up into here, we could really see some momentum get going. I mean, we've already got momentum going. Let me squeeze it in. All right, let me squeeze it in, scroll over. I'm going to have to squeeze it some more, if it'll let me. Yeah, there we go. Okay, so if we get up here and can hold, okay, kind of up in this area, there's conceivably nothing to really slow us down until we get up in here. Now, we've had such a strong move. If I go in, okay, we've had such a strong move, we could exhaust, right? And where would we likely exhaust? Right up around where we're at right now. Okay, we could exhaust, and then because we're exhausted, we could be pulling back or even sell off. All right. Good job. Good job, Sonny. I just read your comments. Good job. Okay, so right here, this is the area that we would be, if we're going to, we'd be likely to exhaust, right? We had this huge move up. Let's look at it. Okay, so from a low of 24.02 to a high of 25.73, so that's a $170 move. This is the hourly chart I'm on right now. So in less than 3 hours, $170 move to the upside. Now we know, right, the odds start to increase that we get likely to exhaust when you have something like that. These are unprecedented moves in this extreme volatility. It's only because of the extreme volatility that we get these kind of moves. Okay, right now it's pulling back. All right, I have an alert set down here, so if this alert goes off, we'll know it's really exhausting and starting to pull back. And we've got less than 6 minutes to go on this candle. We'll see where this candle ends up. If it ends up as sort of like a shooting star, that might be a great opportunity to go short if we take out the low. Okay, but we still got some time. Let me set an alert above it. That'll allow us to keep looking at other things. So let me set that up there. All right. And let's look. Let me scroll through here. Let's look at CGC. Okay, CGC got as low as $9. Got as low as $9 1, 2, 3, 4, 5, 6 days ago. Already, it's back up here in the $15 range. And I've told you guys before, this is a high beta stock, which means it doesn't have to move very much for you to make a lot of money on options. So down here, look at these moves. Like that move right there, somebody would have made tons of money. Okay, here, that's a pretty flat day. There's a big move that would have made really, really good money. Here, it went up, came back down. Yesterday, moved up, right? Started here, came down, came back up. That is not quite a $2 move. 20, about $1.50, but on CGC, that's big, right? That's big. You see the size of these candles. I've told you before, 50, 60, 75 cent move on CGC, you're making money. You're making money. And then today, about $1.22 already. About $1.22. So people making money on CGC. Crowd. Oh, I'll look at Beyond here in a minute too. All right, so here's Crowd, and let's squeeze this in. All right, now this is the hourly, and I'll go back to the 30-minute. Okay, we came down, right? Here's where we formed supply. We came all the way down here, back up. We got in there. We've sold off right here down to this level. Let me go to the 30-minute. Squeeze it in. All right, there's our first touch. Okay, our first touch said it was okay to go short. Right here. Here's our first touch. We go straight down. We were just under 60. We were at 59. All right, was it correct? Yeah, right? Because here's the origin right here. Right here is the origin of the move up. Did we get back there? Yeah, we even got just slightly lower. So it was correct. Come down here. And if you're going to use something like this, and I'm not telling you to use it because I don't have enough data yet. Until I've used it for 2 or 3 weeks and see it just play out over and over and over again, I won't be convinced. It's promising right now, but if you're going to use something like this, you have to use the rules exactly the way that it says. So somebody might say, well, that was 59. That's close enough to 60, so I'm not taking it. Well, if you didn't take it, then you missed that, right? You missed a $4 move, basically. $3.50 move. Actually, it was a $4 move. I take that back. It was over a $4 move. Okay, so the filter right here, first touch is what you're going off of. You were at 59. Let me get back over there. Okay, you were at like 59. And it did. It sold off. Here's the origin of the move up in. That's what you're looking for. And it's telling you you're highly likely to get back down to here or lower. And it actually did get slightly lower than the origin of the move. So it was correct. Okay. I wanted to look at Beyond. All right, so Beyond got a downgrade this morning. And it gapped down, went up right here to where the two moving averages were converging, and then it sold back off, and right now it's sort of flat. It's up a little bit from where it opened, okay, but it's down compared to where it closed yesterday. So it got a huge downgrade. I put it in the room, right? So you guys can go back and look at it, but it was like basically $100 downgrade. That's huge. Like a lot of downgrades are, $5, $10, $20, something depending on the size of the stock. It got like $100 downgrade. So price targets were, like 139 or 129, or I'm going off memory. I'm not obviously looking. I posted it in the room though, and they downgraded it to like a price target of like 39, which is way down here, right? 39, let's see if I can even scrunch up the screen that much. 39 would be way down here. Okay, where my cursor is. Way down there. Okay, so that's Beyond. I just wanted to kind of see what it was doing. Let's look at Euro USD. We haven't looked at that today. Let's kind of see what we're doing. And I can see we are actually getting close. I have to drag it across. We're getting close to some supply. 0.9958. 0.9958. 0.9958. There we go. Okay. So we're not there yet. I have an alert set, but we're starting to get close to supply. Okay, now here, right here, first touch. This should have been a strong supply zone, right? First touch, where were we at? We were above 60, and I already drew it in. This was one of the ones I was back testing last night. I already drew it in. We were sloping up, okay? Sloping up. And we were above 60, so that said, don't go short. Was it correct? Yes, it was. Look, you would have got stopped out right there. See that? Here's a first touch, just barely pulled back, and then went right through, back, and then it's been going up ever since. So again, the filter was correct. This was one of the names I was back testing last night, so that's why I already had that drawn in. Now, we're coming up here, and again, currently, we're above 60. Like if this would all of a sudden pop up and hit this, we're above 60 right now. Okay? So just kind of showing you these things. And again, as I found last night, I spent about 2 hours going through various names. Like I said, probably played out about 90-95% of the time. Facebook. Yep. See your comment there, Sonny. Okay, here's Facebook. Okay, it flushed down yesterday with the market, gapped up. It's been both directions. This candle here, still a spinning top, so really nothing to do on Facebook. Nothing to do. Let's look at GBP JPY. This is a name a lot of people like to play. It's been really whippy lately. You see what I'm saying? Up and down, up and down, up and down. However, if we kind of look at it, let's do it like this. All right, again, I don't trade trend lines. I'm just trying to show you what's been developing here. Okay, you see this? This is what's been developing. So what does that tell us? Right? When we see something like this, what does this tell us? It tells us that price is tightening and that at some point it's going to make a break one way or the other. Typically, you're going to get a stronger move, right? You see this? See how the range is getting smaller and smaller as we go? That's telling us that at some point it's going to break one way or the other. All right, I'll just leave this on here for now. I'm not big on trading flags and pendants or pennants and wedges and all that, but it does give you information. Gives you information. It tells us that we're in a tightening range, which usually means energy is building up, and at some point it's going to pop in one direction or the other. All right, but I know a lot of people like to trade GBP, Forex traders, because typically they make pretty good moves. It makes pretty good moves. All right, here we go again. I want to show you. Okay, first touch was right here. We were above 60, above, so that means don't go short, and we were trending up, right? Here's the first touch. Okay, because again, let's do it like this. I want you to see what you would have seen in real time. Let me scroll it over. Whoop, not too far. Okay, there we go. This is what you would have seen in real time. So you would have went straight down. Are we above 60? Yes. Are we trending up? I've kind of added this. I like to look to see where are we trending? Are we trending up? Are we trending down? Are we flat? Okay, we were trending up and we were above 60, so that tells us don't go short here. Even though this is the first touch of supply, the filter's saying it's not likely to play out. All right, so then let's just scroll over a candle at a time. We went higher. Then we bounced a little bit. Okay, back. Look how it played out, stopped out. Right? So it said don't do it. It said don't go short. We would have got stopped out right here. And that's probably, let's look at it. 02. That would have been about 40 pips, right? That would have cost you 40 pips. And it just depends on your lot size. So a full lot, that would have cost you $400. Half a lot, $200, so on and so forth. Quarter of a lot, and on down, $100. So that would have stopped us from losing money unnecessarily. Let's see if I can, there we go. Let me zoom it in. Come back over. All right, it's trying to break above here. It's trying to. So we'll see, and if we drew a line, right, let's just do it. If we drew a line, what are we doing? We are trending up, right? Okay, we are trending up. So it makes sense that price is starting to break out here. All right, let's look at some other things. Let's look at gold. Okay, GDX, the miners fund. All right, it flushed down, opened here, gapped up, went up, and it's just basically kind of flat. We're starting to see that on a lot of names, right, that we're looking at, gapped up and then flat. We're seeing that on a lot of names. Let's look at gold, GLD. Okay, gapped up, went up here to resistance, came back down, and again, kind of flat. Not doing a whole lot. Let's look at Google. Okay, flushed down with the market yesterday, gapped up, flushed down, came back up. Now it's trying to go higher. The 20 held. If I scroll in a little bit more here, okay, the 20 held. It's kind of been using the 20 here as support this morning. So it gapped up. Here's where it closed yesterday. Here's where it opened. Flushed down, came back up, and right now it's using the 20 as support and it's trying to go higher. So somebody who likes Google, you're now looking, you got a nice little setup right there. If somebody would get above there, It should accelerate up, and then this would be your first real obstacle, this wick over here. But this is a nice little setup. If it could clear this, it should pop up even more. Would it be enough to get over here? I don't know. I don't know. I don't know for sure. Okay, but this is a nice little setup. If it can get up there. If it can get up there. Then you have the 200 above. Got the 200, which is sloping down. All right, that's Google. Let's look at IWM, which is the small caps. Okay, so IWM, for those of you who don't know, it's an ETF of the market, but just the small cap names in the market. That's it. Okay, so some people call this the small capper or small cappers. They'll say, we're going to look at the small cappers. Well, that's what they're talking about. IWM is just an ETF of the market that only looks at the small caps. And here's where we're at. It flushed down. The 20 offered some support yesterday. It gapped up and it's been going higher. See that? Right there. I can squeeze in. Okay, gap down to here. Here's where it closed yesterday. Gapped up this morning and went up. Okay, I don't normally trade it. That's why I don't have any lines drawn in on here. Okay, I don't normally trade it, but I do like to look at it. JNUG is another gold name, but it's a gold name that has been very, very decimated. And as you can see now, it's really not doing anything. So since it's had its big sell-off, okay, look at that. It was at $33 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days ago. It was at $33, went all the way down to 3, and now it's just not doing anything. It's pretty much dead right now. Pretty much dead. Let's go to Microsoft. Sunny, yep. I'll look at those in just a second. Okay, and Cathal, I'll definitely look at the Aussie New Zealand chart in just a minute. So give me a second here. I'll show you Microsoft. Okay, flushed down with the market yesterday, gapped up, has been going higher, got up here to resistance, and so far has sold back down. Way early in this candle, way early. But if this is how this candle ended, we would know we'd have a shorting opportunity, right? But way early. Still got 19 minutes to go. Okay, let me go through these names. Okay, Sunny, you got a few on here you want me to look at. So let's go to gold futures. This is gold futures, which I never trade, but I do watch. All right, just looking now, kind of seeing where we're at on the overall scheme of things. I did have some lines drawn in. Let's go ahead and draw in the rest of our lines. It's been a while since I've even been on the chart. 4-hour line chart. Okay, let me come back here. Get some levels added in. Price line tool. All right, so we need here. We need here. We need here. Let's see if we got anything else above. Yes, we do up here. 1708. All right, so we got our additional levels added in. Back to candles. Back to the 30-minute. Now that looks better. All right, so here's where we're at on the 30-minute. Up, down, up. Okay, sort of double topped right here. Sold back down. We caught some support at 1620.30. Kind of ranged through there. Then we climbed back up to the 1662 support, resistance level. All right, that's been acting as resistance here. Let me squeeze it in. Okay. So you see here, we came down to this level. Nice support. Then we came up. There is our shooting star. All right. Now we could have looked to try to go short here. right? Could look to go short there, but as you can see, not much, right? Not much is happening. It's actually kind of forming a little bit of, I'll draw it in for you, a little bit of a wedge. Whoops, I gotta get the trend line tool. There we go. And if you come across the bottom of here, okay, it's sort of forming a wedge. Now, typically, again, I don't trade these, and again, I don't think that they're always the most accurate. Okay, but typically, if you have a strong move up, then you get a wedge or a flag or anything. Typically, when it breaks out, it's going to go in the same direction as where it came from, but not always, right? Not always. So again, we know what's going to happen here. The range is getting tighter, and at some point, it's going to break one direction or the other. Here's our 20. Here's our 200. The 200 is sloping up. The 20 was sort of flat, came down. Now it's starting to slope up. And it's showing that we're oversold down here again. I'm not trading off of this. I'm just looking to see what it says. So I would be interested to see, are we going to break up? Are we going to break down out of this wedge here? Let's look at the bigger picture. Let's see what we're doing on the monthly. Okay, on the monthly, look at this. We're green and it's forming a hammer. Okay, now that's on the monthly. Weekly. Big green on the weekly. Now we came right up to the top of this candle here. See this? And we've kind of pulled back, but we're still green. And we know on the monthly, and we're almost to the end of the month, we're forming a hammer. Okay, so you see here, we kind of made a little V. Okay, down, back up, got right up here to the top of this, and we've kind of pulled back a little bit, but we're still green. Now let's go to the daily. And because we're so early in the day, we're going to basically be looking at yesterday. Okay, yesterday spinning top, but what is the spinning top in? Look at this. Okay, strong move up. Here's our spinning top. Is it in the top 25 to 30% of this body? It is. The only, when I say negative, the only negative to this is you really would not want to look at a long until you take the top of that wick out right there. Okay, you see that? So on the daily, and we are green, right? This is today, this is yesterday. Strong move up. So even if you combine the candles, right? If you combine these candles, that'd be a strong green candle. You have your resting candle. We may end up with another resting candle, right? Today may end up a similar spinning top, and then maybe it's the next day that you look to try to take these out. But if somebody trades this, you should set an alert right up here. If you get up here and take that out, then you would be looking at going long, right? Because as of right now, even though that's red, that's bullish because of what we can see here. Strong move up, resting spinning top. Remember, a resting doji or spinning top in the upper 25 to 30% of the body of this candle. That's a bullish sign, but there's nothing to do unless you take this out. All right, so that's the bigger picture on gold. Okay, and then what's the next one? Is that SI? Let's see here. SI. Silvergate Capital, okay. Siemens. So Siemens right there. All right, so here we go. So yesterday, look at this. Yesterday they ended strong when the market actually ended weak. So different, right? Then today they gapped down, came down just a little bit, and now they've been moving up. This is not a name I trade or watch, so let's draw our lines in. Okay, I can see on the 4-hour it's had a big drop down here recently. Okay, here's current price. Let me get our price level tool. And let's start drawing them in. There's one. There. 762. Now we start working our way up. And here. Remember, you don't have to be exact. Sharp pivots or bigger moves. This is a sharp pivot. That's the only reason I'm going to draw it in. You ignore the little stuff. And then come up here. 1675. Now let's turn back to candles. All right, go back to the 30-minute. And here's where we're at on the 30-minute. Let me go to the 1 hour because it'll bring up slightly more data. There we go. There we go. Okay, so you can see we fell off a cliff, right? Fell off a cliff here. We've got these big gaps here and here. Those are going to act as resistance on the way back up. All right, we're starting to break into the gap right now, right? So we tried once. This is where the gap originally was, right here. Okay, now look at this. If I come down here and then look over, we tried once, sold off. Now we've come all the way over here. We're trying again. Each time we try to penetrate the gap, it should make it a little bit further in. Right? It should make it a little bit further in. Oh, am I looking at the wrong name, Sonny? Is this not the name? Are you wanting, I'm sorry if I'm looking at the wrong one. Are you wanting, is it SI? Yeah, silver futures. There you go. I'm sorry. Well, we did some good analysis on that other one anyway. All right, here's the silver futures. Let's draw our lines in first. And then we'll go back. As you can see, it's falling off the cliff too, right? Okay, so we got to draw our lines in. Here's where we're at currently. Down here. Down here. Okay, right here. I'm going to ignore that only because it just barely poked through there. Now we got to start working our way back up. Get some levels to the upside. I'm going to ignore all of that right there. We'll come right up to here. And then we got some good levels up here. I'll draw a few more in because we know that we had a big drop, so I'll draw a few more in once I get up there. Like here would be one. There would be one right there. Okay, that's probably enough. Let's go back to candles, back to the 30-minute. In Cathal, I will get to the Aussie New Zealand pair here in just a second. All right, so here we are on the 30-minute. So on the 30-minute, you can see we're really just sort of trading sideways on silver futures. Really just kind of trading sideways. Let's squeeze the screen in. Okay, we were in an uptrend. Okay, we were in an uptrend. Then we went sideways. Let's scroll out to the 1 hour, see if we can get a little bit. Yep, going to give us a little bit more. Okay. So this gives us a little bit more context. All right, this area right in through here, all right, would have been supply up to that point right there. Okay, but you can see we didn't reject it. Like even if I draw it in, let me go ahead and draw it in for you. You would have went up to the top of that wick right there. So even if I draw this in, and I'm not being exact, I'm just trying to get you an idea. Make it pink. Okay, so we had a level right there. We came up to it and actually poked through. And look, if we come down, we were above 60, right? We were above 60, so that was telling us this wouldn't have been a good short. So we did poke through right there. We would have been stopped out. Came down here, came back up, poked its head. But we've really just been ranging right through here, right? Now what we did do, you can see here, we did put in a nice slow curve formation back up to here. All right, back up to there. Right now just ranging. Because we didn't reject and come down here, it doesn't look like we're going to put in a cup and handle, but what we may do is eventually try to go higher, and then you got to get over this wick right here, basically 15274, and then your next level, okay, which is going to be some supply, is going to be right up here. See that? Let me kind of draw it in for you. I'm going to kind of put it like that. All right, so that would sort of be your next area if it decides to break higher. All right, and where does that come from? Okay, we rallied, based, big drop away. That's where that supply zone comes from, right there. Rallied, based, big drop away. Over here, huge drop away after a base. So we went drop, base, drop. That's where that came from. But as you can see, again, the filter worked. The filter said when we got in here on this first touch, again, this should have been a strong supply zone. But the filter was saying too much momentum to the upside. Too much momentum to the upside. And then we've just been ranging since then, and we would have got stopped out. All right, so one more here for Sonny, and then we'll go to the Aussie New Zealand. He wants oil. And I have, let me do this. There we go. I was going to say, I have oil. All right, so here's oil. This is the 1 hour. Let me go to the 30-minute. You see oil's been all over the place. And as you can see, this is a name actually I was back testing last night, right? So, like right here, first touch, come down, we were above 60. That meant don't take it short. And what did it do? It went right through. See that? Now, Todd Father, way back at the very beginning of the live stream, you were asking about that one where we had the strong green candle up and strong red candle straight back down. This is sort of that same scenario, sort of, because you can kind of combine these ones into one. And look, it just really wasn't that strong a supply to begin with. Now, we know from the filter was telling us don't do it, and we can also see we were going up. See this? We were going up. Let me switch back over. I like to give you guys visuals because I'm very visual when I'm trading. Okay, so we were sloping up, right, when we got there, and we were above 60, so that says don't go short. But what I'm saying is it wasn't the best area to begin with. We really didn't have much basing here. I would have liked to seen strong move up, at least a couple of basing candles, or a bigger wick on one of these candles, and then in that case, maybe it would have been better, right? Maybe. Okay, so let's go back over. Then we came down. Okay, over here, when we touched this, it was below 40, so it said don't go long, right? Because that would have meant that we should get back up here and at least test this. And did we? No, we did bounce, but then we came right back down through, right? And would have got stopped out. All right, then we came back over here. Where was our first touch? First touch was right there. Now here, let's see, were we actually above 60? Yep, just barely above 60. 63, 62 on this first touch. So again, it said don't go short. It did bounce down a little bit, but then it went right up to the top, took it out. Right, then we come back over here, but you can see the crazy action on oil here lately. The crazy action. Now, this one, okay, this one didn't touch. Right here's your first touch. Oh, where are we at? Let's look. Or was this? I'm going to have to scroll in to make sure. That one did not touch. So here's our first touch. And we were, it looks like we were slightly below. Is that correct? Yep, we were below 40, but this one did work, right? So here's one where it told us not to take the short, but the short did work. It actually did come back to the low of the origin of the move and got below it. Okay, so here's a case where it didn't work. Okay, we've been on now for about an hour and 15 minutes, and we've only found 2 cases where it hasn't worked yet, right? All those other times it's been correct. So it's not going to be 100%, right? Not going to be 100%. It would have, it would have been wrong right here. Okay, now let's go look at Aussie New Zealand. Aussie New Zealand. All right, here we go. Let me draw my lines in first. Go to the line chart. 4 hour. Current price. Got to get to my price level tool. So this is for Cathal. Let's start drawing our levels in. Okay, sharp pivot right there. So we definitely want one there. Okay, above 10270. I would probably put one here. Here. There. And I would put one right there. Okay, why do I go here and not here? Because that was just a little move. This was a bigger move. So if you might be asking why did I put them where I did, let's go back a little bit more. See if it goes up. There we go. I'm going to ignore most of this. I'd probably put one right here because that's just real choppy stuff in there. I would probably put one right there. Okay, we're definitely going to put one here and here. And that's probably good enough for now. Let's go back to the 30-minute, back to the candles. And now, okay, now we can kind of see what we're doing. All right, so this is the Aussie New Zealand dollar. And you can see the price action. Okay, we had this nice strong move away. And now we've come up. Okay, look right here. Now the only thing that I don't like about this area, all right, it did act as some support. Somebody tell me what I don't like about this. Okay, we've got the nice base, but what don't we have? We don't have the strong move away, right? Okay, so if I was going to draw this in, I'm not going to. I'm going to show you what it would look like, right? So it would look like that, and we did get to it, right? We did get to it here, but the reason that it's not a strong area of demand is because it never left the area in a strong way. Okay, now that's a beautiful rally-based rally, but it didn't leave very strong, which tells us, okay, it just tells us that there's not a lot of aggression right in through here by the buyers. Probably not a whole lot of unfulfilled orders. And when it came back to test it, we were above 60, right? Actually, I take that back. Above 40, because that's when you're going to go this way. You're looking to be above 40. Okay, but I don't really like that area. Now, if we come up here, okay, let's look up here. Okay, that's not bad. I mean, again, it's not probably the absolute best. Probably not the absolute best up here. I'm going to scroll back. I'm just looking for areas. Okay, again, Todd Father, here's that big red candle, big green candle. Not an area you would draw in. Okay, not an area you would draw in. There's really not a whole lot of good stuff for supply and demand on this chart. Okay, so I got asked this question yesterday, and maybe it's good reason to talk about it. What do you do if there's not a whole lot of good supply and demand areas on a chart? Okay, you can start going up in time frame. Okay, you can go to the 1 hour. Okay, do we find anything on the 1 hour? All right, maybe right here. Okay, nope, because this would have been an area right here. Okay, so let's draw this in. This was a good area. Now it broke through. All right, it did break through. And does it make sense? Well, of course it does. Look how far below 40 it was when it got here. So that was telling us the momentum was likely to carry right through. But that is a good area. Look at that. Strong drop, nice base, 3 candles, strong move away. It just was the momentum was so darn strong that it got through there and then it turned around. All right. I had this big candle over here too. All right, which was selling down. But you see there, again, the filter was correct. Way below 40, we went right through it, then we reversed. Okay, but that was an area. Now let's come back up here. Does this area look better? It looks better, right? Let's just go ahead and draw it in. So when you don't find an area of supply or demand on the time frame you're normally on, go up a time frame. If you don't find one there, you can go up another one. All right? And or you trade support and resistance and price action until you start forming some good zones. All right, so let me make this pink. So that's what you do if you can't find good quality areas. Don't force it. If the time frame that you trade, there are no good quality areas of supply and demand, go up one time frame. Can you find any there? If you do, draw them in. If not, go up another time frame, or you just trade support and resistance and price action. Okay, so on the 1 hour, this is better. It didn't look as good on the 30-minute. But it's better. I'm going to go ahead and put an alert here. So if we do get back up there, I'll always look to go short. Okay, but when we get there, I don't just immediately enter, right? What will I do? I'll look at my filter. I'll also look at previous price action coming into it. I found out a good tip the other day. I was watching somebody else's video. They were talking about supply and demand. They said one of the things to be careful of is you want price to kind of be strong when it enters, but not too strong. Now that sounds kind of, sounds like they're playing both sides of the fence, but here's what they meant.
What you don't want to see is price get right up to a level, but not touch it, and then base, and then go up into it. You don't want to see that. And if you think about it, why does that make sense? Because that base is showing you that you're probably going to just come back down into that base and bounce and maybe range or even go higher. So you want it to have some momentum. You just don't want it to have a ton of momentum. So you'd like to see a nice steady climb, hit it, and then bounce away. You don't want to see it get right up to it, then base, then go into it. If you see that, this video I was watching, and the person was giving all kinds of examples, and he was right in the video. I didn't back test it. I'm just telling you, because it does make sense, right? If you got up there and you based right below it without touching it, and then you go up into it, well, really, you don't have much room, because what does this filter tell us? Even if it tells us to take the trade, it's basically saying that you're just going to get down to at least the level, the low of the origin of the move into it, or maybe below. Well, if the origin of the move is right below there, that doesn't give you much profit potential. I hope that makes sense. Okay, let's scroll out and let's look at a bigger time frame. We're still on the Aussie New Zealand dollar. And of course, Thinkorswim is just taking its good old time. All right, here we are on the 4 hour. So each one of these candles is 4 hours. So up here, we rolled over, we sold off all the way down here. Okay, now we found some footing and we're working our way back up. Okay, so you can see, look at this. See where I drew this in on the 1 hour? On the 1 hour, those were some basing candles. On the 4 hour, it's this wick right here. I drew it in on the 1 hour, but you see how it applies to the 4 hour? It's this wick. All right, and that makes sense, right? So if we were just playing price action, this would be a short, right? And why is it a short? Okay, because we have selling pressure. That's what created this wick. When you take out the bottom of this, we look to go short. This would probably be T1, and then right down here would be T2. I would probably be already out, but if somebody's playing it longer term, because remember, each one of these candles is 4 hours. 4 hours, 8 hours, 12 hours, 16 hours, 20 hours. But where did it go? It came down to the next level of demand. It did poke all the way through because it had momentum, but look where it really held. It held this support area. Then we formed a hammer. So you could go long when you take that out, and I would probably have a T1 here and a T2 here, and we would have hit both of them. Okay, so that's why I keep saying this over and over again. If you don't take anything else out of today's session, price action over everything else, right? We're all playing around with this indicator, but price action over everything else. You trade price action first and foremost. Okay, because price action, we know in real time what's occurring, and we know what to be true. We know where our targets are, and we know that those are highly probable trades. When we're trading this, we're looking to catch maybe a little bit bigger moves than normal, and we're just trying to put the probabilities in our favor. Okay, so I hope that makes sense to everybody. Anything else anybody wants to look at? Let's go back and look at the market. Okay, we've went over a little bit today, which is fine. Hey, if you guys had good questions, I'm fine staying on here all day if we had to. In fact, Grayson and I have talked. Grayson, like half sarcastically, has said that I should do some all-day live streams occasionally, and I'm not opposed to that. I'd have to take some bathroom breaks and maybe refill and get another drink, or maybe take a break and get something to eat. I have low blood sugar, so I do need to eat every once in a while to kind of keep my blood sugar normal. But I'm not opposed to doing that. And if people had great questions, or they were entertained enough to stay on for an entire trading session, I would do it. There's people that do it. Grayson found a guy a few weeks ago. This is when the topic came up. This guy, he does full 6.5 hour live streams and he gets like 16,000 people. Not every day. I think Grayson said like the next day he had like 5,000, and one day he had 8,000. But the one day that we were watching him, the guy had 16,000 people, and he's on for 6.5 hours. Comes on right before open, and he stays until close. But I'm just kind of being funny here. But the one thing I didn't like about this guy is over 6.5 hours, I would say 20% of the time he spent on the market, and 80% of the time he was talking all kinds of nonsense. Like stuff that had nothing to do with trading or markets or anything. But anyway, we're back. I haven't switched back over to the market yet, but look here. Look here. We got this nice base, and it's dropping away, right? So if this continues to drop and this candle closes down in here somewhere, this will be a supply area. I just want everybody to know that. Okay, we don't know yet because there's like 15 minutes to go, but look, we're starting to drop away. We finally broke through here, came down, the 20 had held, and when we had left, and we're looking at other time frames, it was sort of up here. Now it's dropping through. So if, I'll show you kind of where it would be. If that candle closes big and down, you'd have a zone up in here. And this is not real until that candle closes. Okay, so if this just comes down here and then bounces right back up, this is not a zone. Understand me. I'm giving you a hypothetical. I'm actually going to take this off here in a minute. But if this candle continues down or even closes the way it is now, right, that then forms a zone, right? You have a rally, base, drop, significant drop away. Significant drop away if it continues and closes that way. So I was just saying how we didn't have that many great areas on here, but we could be forming one right now. Okay, I'll just leave it there for now, but I'll take it off if for some reason this bounces and this does not end up as a good candle. So somebody may ask me, okay, right now it's showing a strong move away. Correct. But what if it comes back and it's got a big wick like this? Then that means this is not a zone, right? I don't care that you got the base. Okay, if you get a couple big wicks in a row like this, leaving this area, that's not a zone. That's not a zone. But if we continue down and we end with a large red candle and then we start and maybe go down a little bit more, that is a zone then. That's telling you there's a lot of aggressive sellers and there's an imbalance, meaning there's not enough buyers to stop it from dropping. That's what these big wicks would indicate. If this came back up here and you had a big wick, you have a bigger wick here and a bigger wick here, that shows you there are buyers there. Okay, there's sellers and buyers and they're fighting it out. But if this drops away, then that shows you the sellers were overwhelming the buyers. So I'll leave it on here and we can always look at it another time. Okay, back to the market. See where we're at. We're on the 30-minute here. I got all kinds of alerts and none of them are going off, which tells me nothing's really happening. Okay, you notice we did make another attempt, but we didn't get over this. That's why I have this alert up here. I told you right up in here, if we were going to exhaust, right up in here is where it was going to happen. Because remember when we looked at that bigger picture, we knew we needed to get up just a little bit higher to really get into that one big candle on the hourly. That one big candle that was like $100 wide. So right here is where we're looking if it's going to exhaust for it to happen. If not, if we take this out, okay, we got our doji. The last time we were here, we were talking about this, right? If this was a doji or a shooting star, that's still bullish if we can take this out up here. So if we take that out up there and get some momentum going, that's when we could get up into that big candle that wouldn't offer very much resistance at all. And maybe you could keep on shooting. Now I'm sure we would probably hit limit up before we made much more leeway. And so let's figure that out right now. I got to go back to yesterday. All right, so where did we close? We closed at 24.6650. I'm gonna get our limit up level. Limit up level. Sonny, I saw your comment. Said it'd be stressful, but be willing to try it. 24.6650 times 1.07. Okay, remember during regular trading hours, the levels are 7%, 13%, 20%. Okay, so 26, excuse me, 26.39, 26.39. So let's just look where that would be. It would be, right up in here. Okay, right up in this area. If we got up that high, we would go limit up. There'd be a 15-minute halt. Then they would resume. Okay, and then if we went up 13%, which we'd have to figure out the number, there'd be another 15-minute halt. Then if we went up 20%, they would halt trading for the rest of the day. So it'd be up in here. So we could potentially get close to closing this entire space up. All right, somebody was asking me in the room the other day, they're like, well, is there, and it might have been you, Todd Father, I can't remember, but somebody was like, is there any levels in between here? There's no levels, right? Because we already looked at it on the hourly. Let's go back. Oh, I didn't go back far enough. Hang on. Okay, here we go. See, there's no levels. That's why there is no level drawn in. Okay, look at the drop that we had. This one candle alone was almost $100. That was almost a $100 candle. That's why I keep saying if we kind of get up to where I have this alert set, price really could start to take another run up. Now, how likely is that? I don't know. I mean, we've already had a big run, right? Here's where we're at. Let me, this is the hourly I'm on right now. Okay, so we already looked at it. What did we say? 170 some dollars, right? If I remember right. Low of 24.02 and high of 25.73. Yeah, so already over $170 move to the upside. I mean, that's just mind-blowing, right? It's mind-boggling. So can we continue up? Of course, we can. But this would be the area, if we were going to exhaust, that it would probably occur in. You know, right in here. You can see it's trying. It pushed back. It's trying to push higher. It's not got up here yet to take this wick out. We're on the hourly right now. I'll go back to the 30-minute in a second. But there, as you saw, there's just nothing over here. Squeeze it in. Okay, there's just nothing over here, right? We got no wicks. We got no basing. We got nothing over here to really slow it down until you get to the top of this candle, which is around 26.30. And I think in the room, whoever asked me the question, I don't know why I think it was Todd Father, but whoever asked me the question, I gave them like two numbers. I said, if there were any obstacles, it would be here and here. And I think 2630 was one of the numbers I gave them. Yep, Sonny, you're absolutely right. No resistance anywhere near if we get up there and take that wick out. Okay, so you're asking where do we need to get to be bullish? Well, again, it's taking out the top of this wick, right? Let's get back over here. It's taking out the top of that wick, but again, I want you guys to keep something in mind. Although we could take this out and just blast, up in there to where we get to that limit up number, okay? At any time, again, at any time, institutional money might say, you know what? We don't want it to go any higher. And they could come in and they could stop it, pause it, or they could get super aggressive and cause it to sell down. Okay, but just the way structure is right now and the way previous price action has played out, if we get above here, there's a chance we could run. Okay, just see this here, right? See this here? We're still in the 1 hour right now. All right, we could see something like that up here if it clears this, but there's no guarantee. There's no guarantee. Okay, look how strong it was on the hourly. We even had this strong wick here, had no problem going right through it. It didn't slow down until it got up here into supply. Then it pulled back just a little bit. Then it went up. Then it pulled back. And now it's trying to go higher. So let's go back to the 30-minute. Okay. So you can see on the 30-minute, here's where it slowed down when it got into supply. Pulled back to here. Went up here. Pulled all the way back down to here. Now it's trying to go up and it's trying to take these out again. All right, and we're still going up down here on the filter, which told us not to go short here, and it was correct. It's telling us momentum is too strong. I got you, Todd Father. I thought it was you, but I couldn't remember for sure. But if you remember, I gave you like two different numbers, and one of them was the top of that candle at 2630, because that's where that little wick would start. And those are just potential areas. I mean, it could just go right up to that next resistance level. And there was another one I gave you. There was two numbers I gave you. But anyway, so if we come back down here in this move today, right? When we got up through here, we had just a little pullback. Then we got up to here, which was the top of this. Okay, and on the other chart, this was that big wick, right? How do we know it was a wick? If you combine these two candles right here, you see how it sold down and then come over? That would form this into a shooting star, and that would be all wick right there. So when we run the 1 hour, that's why this is a big wick and it's not on the 30-minute. On the 30-minute, we went up and then we sold down. But if you combine these two, that's all wick right there. Okay, but that's where it like paused, came here, then went higher, got up into supply, paused, pulled back to here, went higher, came down. Now that's a pullback. That's more than a pause. Pulled back, formed our doji, spinning top kind of doji right there, which I told you is bullish, right? And now it's trying to take the top out up here. We'll see if it's got enough strength to do it. Okay. We can hang out for just another couple of minutes and we'll see if it does. We've only got a couple minutes on this candle anyway, about a minute and a half. Then a new candle will start and we'll see what it's going to do on the new candle. So if we get above there, right, you could potentially be looking at some more upside. The only thing that makes me nervous is how much effort the bulls have already put in. Now they are kind of resting right here. They are kind of resting. So definitely some people took some profit right there. That's what caused this. Okay. People that were in on this move were probably like, hey, you know what? We're kind of in an area here where it probably makes sense to take some profit. That's what caused this pullback. Okay, we got about 40 seconds to go on this candle. And we'll see what happens. Look how far we are over opening price. So this move obviously started before regular trading hours, and it's just been continued. Let me stretch this up a little bit. There we go. Okay, it's working its way up there. And 4 seconds to go. It's poking its head above. Here's our new candle. Let's see what happens. Al, my next supply zone on the market, on ES, is that what you're asking? $26.72. Let me take a look. All right. So you guys can keep an eye on this right here. Okay. We barely pierced this, but you can see we're not really doing anything yet. Okay, if somebody's looking at taking a long there, I wouldn't be long yet. I would wait and see that you start getting a little bit of green above here. And then I would have a tight stop if anybody does try to go long. Okay, all right, but you're saying, look at 26.72, so let me do that. Let me come over here. All right, so you're kind of looking up in here. Now again, there could be some resistance right here, but this is what we talked about a couple times today. Up and then straight back down. Not really any basing there. Not really any basing, and we don't really have any wicks. Okay, that makes it not as strong in terms of a supply area. Now, can the top of these candles be resistance? Yes, they can. All right. Why do we not have a level drawn in there? Well, you can see going either direction, right? Going either direction, there's never been any other respect in there. Okay, so if we come over here, it's right in the middle of this big candle down. This is only a 1 hour chart. It's not like we're on a 4 hour or a daily. Okay, we're on a 1 hour here, but it went straight up and came straight back down. That typically, unless you get a wick on one of these candles up here, that's typically not a supply zone. You may have a little bit of resistance right here, but not necessarily a supply zone. Okay, I hope that makes sense, because look to the left. Always look to the left. Right? There's nothing in here. Right? Nothing in here. There's nothing this way either, because we know where current price is. It's right down here. This black number right here. There's nothing either direction. It's never had any respect. It just came up and came straight back down.